Hello guys, good morning. Actually in this video we'll talk about the financial statement, that means the financial statement of the financial positions, okay, which is called the balance sheet. So in the balance sheet there is one questions we have in USCMA. So these questions, if I'll define about that, let's go to the study about the questions. Okay, first the meaning of the questions is, the question is asking us, a treasury stock, a company has the following item recorded on its financial records. Okay, so these items they have recorded in their financial positions. Okay, so available for sales, debt securities. Okay, another one is prepaid expenses and treasury stock. So here all of three items has included there. So one is available for sales, debt sales securities is 2 lakhs, and prepaid expenses is 4 lakhs, and the treasury stock is 1 lakh. So total are the considered as an assets. Okay, but why the treasury stock is not the treasury stock is not assets? Why? Because treasury stock, it is an equity, part of the equity. Because when we are buying the treasury stock, so treasury stock means like you have the extra securities. Okay, and you are rebuying that securities. You have the securities, but you are not going to be sell to the others. You are taking back to in your company, take it back. So it is not the enhancing in the assets. Okay, it is just the reducing, I mean the same amounts. Is your own stock you are buying. You have your own property. If you are buying it, you are not going to be sell to the others. You are just buying it by yourself. So it means treasury stock is that. So if you are buying it, that's why it is called, here you can see the treasury stock is equity items. Okay, yes, it is called the equity item. So you are just buying yourself your own property. So it's not the vast difference. It is not the so it's not considered as an asset is there. So available of the sales. So here is available for sales, debt securities, and the prepaid expenses is both are the considered as an assets. So assets is only because that this treasury stock is a part of the liability, not liability, equity. And equity items we are not adding is there, right? So that it is okay. So this is the way we are doing it. Okay, so hope you understood it. So available for sales, debt securities, and prepaid expenses, this is both are the considered as an assets. Okay, so now we'll go in the another question. Look, here's saying that we will be study together. Here's saying that an entity had the following account balance at year end. Okay, at the year end the entity has this kind of the following balance: sales, cash, account payables, rent expenses, account receivables, cost of goods sold, land, unearned revenue, gain on sale, equipment, inventories, notes payable. So here's these all the items are there. But now it's saying that what is the amount of total current assets reported on the balance sheet. Okay, so here you have to check the current assets. So which one could be the current assets? So if we'll talk about the current assets, so just a minute, let me bring the increase the brightness. Okay, yeah, so here we can see the current assets. Sorry, mistakenly I pressed the button and it came. So it is not a correct answer. B is not a correct answer. So here we have to go for the current assets. So sales is not a current asset, so part of the current assets. So 2300. Account payable, it is also a current assets, 14300. Thereafter rent expenses, it is an expenses, it is not a current assets. Sorry, account payable is a current liabilities, so we cannot take. So account receivable, yes, that could be the 9400. Then goods sold, land, unearned revenue, unearned that means we have not yet make money. So gain on sale, so gain on sale is in a current assets. No, it is in a revenue. Equipment, inventory is in a current assets. It is coming under the current assets, but actually it is a loss, not payable. So when we add this all the amounts, so how much it will come? 2300 to 23,400, 9,400, and 2,200. Total will be